Success in Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. It's Kerry, Lutz. And what's going on with the markets? That's a refrain that you'll often hear us express on the Financial Survival Network. We sure don't know. Precious metals, oil, stock market, all in a state of flux. Got Woody O'Brien with us now. You know him well. His website, woodyknowsmarkets.com. Woody, welcome back.
Hey, Kerry, great to be with you again.
Yeah, so interestingly enough, things have changed dramatically since we last talked. Oil down better than 50%. Everything that's gone with it. Stock markets still hanging on. What is your take on what's going on here?
Well, there's in energy, there's lots of bad news and lots of good news and lots of bad news and lots of good news. First, the good news is we're all getting a relief at the pump. It costs less to fill up your car than it has in a long time. However, that money isn't really stimulating the economy. People are saving and they're paying down debt. They're not just using that money overall to buy something else. So what should be a great advantage for the consumer economy isn't. The problem is that, if the gas in your tank costs a little bit less, that's not going to help you a whole lot if you lose your job. 1 in 8 Americans has a job related to energy. 1 in 16 is in the actual direct production. At these prices, nobody who's drilling for oil in Texas or doing fracking or unconventional gas is making any money. They need a price in the 70s to 80s just to break even. In the 40s to the low 50s, there's an awful lot of people in the production of energy who I've been saying we're going to be laid off by Valentine's Day. Here we are at the eve of Valentine's Day, and we're hearing about big layoffs of production and drilling crews. The only people who are going to be drilling for new energy are people who have to do it, who have to have the cash flow, because they have loans they have to pay, which is the next problem. You have big money center banks that have lent billions of dollars to fracking and other unconventional energy producers that are totally underwater and uneconomic in the $45 to $50 range of oil. So the problem is everybody thinks this is going to be a net benefit for the consumer, but you get another couple million people in the oil patch who lose their job as a result of that. That's not going to be good for anyone. The good news is an oil decline like this, and it doesn't make any rational sense because there's only a 1% to 2% oversupply of energy in the world to have a 50% decline. This is going to be self-correcting because what you're going to have is people producing energy at a price they can't sell it for, and they're going to cap those wells. They're going to stop developing. They're going to cancel projects. That eventually, 6 months to a year out, is going to mop up the oversupply. And I don't want to say we're going to be back to $100 by Christmas, but certainly we're not going to be anywhere near 40 or 50 when we get into the third and fourth quarters of this year. And I think the thing for everyone to focus is that for every dollar of energy benefit to party A, there is a dollar of energy cost to party B who produced it. So at the best case scenario, this is a break even for the economy. I would say it's a break even to a little bit to the bad side. And a good way to think of it is it's bad for Exxon, but it's good for UPS. But to me, the unemployment factor here is really, really big. This is a big enough decline that this could tip the economy deeper into recession. I'm not going to say back into recession because I don't think we've ever had a recovery. I think the numbers that Uncle Scam is promoting, that the economy is in recovery, are complete baloney.
What do you mean? Prosperity's just around the corner here, Woody?
Well, based on what? I think historically, any economist will tell you that the most important thing that makes an economy really successful is brand new technologies. And other than the mobile applications and Apple and Elon Musk and those electric cars, there's not really a whole lot of innovation or new technology that's out there in the economy. It's unfortunate because we're putting a lot of money into technology of military drones and military robots that ought to be going into agricultural drones and agricultural robots. You ought to be able to do farming using robotics, but we're still many, many years away from that being marketplace common. But I think the bottom line is if you don't own any energy, there's going to be a point here in the next couple of months where it's going to be a good place to bottom fish some of these energy names. But I think if you own most of the stock market, given the danger of the economy slipping back into recession because of this decline in oil, this is a good time to take your profits and run and start looking at other things. I mean, gold is having a pretty good year so far. Silver is having a pretty good year so far. This problem in Greece certainly shows that, the system is still voluntary. The big shock we had when the Swiss bank delinked from the euro showed that rational people can make rational decisions to prevent their currency from being trashed. So I think this is a very, very good environment to be selling most stocks and a good environment to be buying most hard assets, especially dry grain, especially farmland. There's one particular farmland investment I want to mention specifically. It's called FPI, which is Farmland Partners, Inc. It's a company that basically buys existing dry grain farms from farmers, leases it back to them, and then pays the shareholders a 4% dividend. This is a great real estate and food and hard asset investment. And essentially, because the only thing it's levered to is the need for 7 billion people to eat 3 times a day. That's not ever going to change. It's not like Apple has to put out a new iPhone to continue to be successful. If you own farmland, you just have to depend on people needing to eat every single day. So I think assets like that are dirt cheap. And that's the place that people should be putting their money.
And also, what about the concept that everybody needs a roof over their head?
That's true, but I will just tell you, I'm not a big fan of the individual or collective ownership of rental real estate, and the reason is because that real estate has the counterparty risk of the person earning an income and being able to pay the rent. In this economy, that's a counterparty risk that I would rather avoid. I'm a much bigger fan of the farmland investment area. And another one I would suggest is the data centers, where you are investing in real estate data centers. All these big corporations need backups for their data. There's a number of stocks and ways to play that, because those big corporations are going to pay the rent. Anybody who's middle class and under $60,000 a year, is living at the cusp of potentially losing their job, unless they work for the post office. I as an investor don't want to be in that risk space at this point in time. That's a great place to be when you have a successful growing economy and expanding jobs. It's not a place that I want to be deep mired into a recession.
Mm-hmm. Yeah, well, I know what you're saying, but somebody's going to come up with the money to keep a roof over their head, all but the most marginal, right?
You would hope so, but I would say to have an apartment, yes, you're trying to have to pay the rent to stay there, but I'm more certain that people have to eat 3 times a day than that they will pay their rent on time.
Yeah, you have a point. And so you think data centers are a big potential
data centers have been terrific in the past 2 years. There's a lot of them around. There's no specific one I want to name or recommend, but basically when they have these billion-dollar data centers where big companies like Yahoo and Google and Microsoft need a place to back up their data, mutual fund companies, brokers, banks are another good example. And these things are too expensive for them to build their own, so they just rent space in somebody else and pay rent for it. These companies collect huge amounts in dividends. It's a great alternative to having money in the bank at a tenth of 1%. To 1% in a certificate of deposit. At least you're getting a little bit of income. And I would say the world can come to an end. That data is going to be secure, and the companies who own it are going to pay the rent for it.
Interesting. So it's kind of like, there's another one that I like also, cell phone towers.
I don't know enough about cell phone towers, and because that's kind of a technology-based thing, I'm always a little leery for things that are based on the electric power grid, because I think the grid is in such bad shape. The data centers all have their own backup powers and backup generators, but I've seen lots of investments around cell towers over the years, but I've never been in one because it's I would say it's one of those technology areas I just don't understand.
It's very low tech, actually, when you get down to it. In fact, it's so low tech that they've been around from the birth. Radio transmitting towers, radio stations kind of started there. And it's kind of fascinating because the one technology that people have been really buying and upgrading and increasing sales on, cell phones, smartphones, no question about it. And you're just seeing that explode. So there are companies that just specialize in that. I'm not recommending them. Can't do that anyway. just something that be aware of.
Yeah. If I could mention a couple other things that we're looking at now, I think this is an interesting time to look at ETFs in sugar. That one is SGG. There's a couple for chocolate. There's a big shortage in chocolate coming. The one for cotton. Again, these are not things that, you ought to have 20% of your portfolio in. But if you have a substantial enough portfolio, $250,000, $500,000, it's not going to hurt you to have 1% in these things. And I think for no other reason than these things are all levered to things that don't have anything to do with the U.S. blue chip stock market. I'm going to be real surprised if we get substantially over 2,100 here. The blue chip market just looks so tired, and it has so many fundamental problems in it. The sales of these big companies are starting to roll over. They're running out of accounting tricks to be able to continue to show earnings growth. And I think, in terms of the S&P 500 and the Dow, there might not be there might be another 1% to 2% higher, maybe even 3%, but there's 20 to 30% on the downside risk. This is a place where I just think that the risk and the reward of the American stock market is out of whack.
On a fundamental basis, I would agree with you, and I see it with no place to go but down. On the other hand, you got money coming from all over the world, and who the heck knows how much longer this thing can go on.
Well, let me switch gears on you for a second about something that can't go on much longer because we're almost to zero, which is interest rates. And I think we're getting to a very, very interesting place here where interest rates are just so low, there just isn't room for them to go any lower. Yes. We all know in the longer term, they have to go higher. At some point, they're going to have to go higher just to defend the falling dollar, which is really at a bubble kind of top here. And I think this is a moment where people should start to nibble. And I would emphasize the word nibble and start to look at these inverted treasury ETFs, funds that are single and double short U.S. Treasury bills. One that we've owned a bunch of times and made money on is TBT. I think owning a U.S. Treasury bond on the next 10 years is probably the worst possible thing that you can have your money in. I think shorting those in an ETF is a terrific idea. I think people should start with fractions of 1% and kind of dollar cost average a little bit into those as they bounce along the bottom here. Because one thing is for sure is it might be a year, it might be 2 years, but much higher interest rates are in America's future. And when that happens, some of these inverted bond funds are going to be spectacular gainers, 100% per year. And I don't think it's too soon to start nibbling from here and building a position with a hope to get up to 3 to 4% of portfolio over the next 2 years.
Yeah, and you think that's going to happen? Well, it has to happen at some point, but negative interest rates impossible in the U.S.?
I think they are impossible in the U.S. There's been a couple of countries. They've happened in Japan once. You can almost say at 0.1% interest on your bank account, we're almost there. And with fees, we probably, you probably are having to pay in most cases to hold money. But I'm going to say no. I think we are as low as we can go. There's a lot of people like my friend Pete Schiff who say, well, they can't raise interest rates because if they do, it kind of all comes down and collapse. Real estate falls, the stock market falls, et cetera, et cetera. And I thought to myself, well, this would be true, except some bankers are the demolition experts of the world, and they and their friends will make money in either direction. They made an awful lot of money since President Reagan, and 14.75%. 30-year U.S. Treasury bonds. We've fallen an awful long way. There's been an awful lot of bond appreciation there. And the one thing about banksters is they're happy to make money in both directions. So I think this idea that, the Fed won't eventually pull the trigger and raise interest rates and effectively kill everybody, to say that'll never happen, I think it certainly will, because, demolition experts get paid to destroy things. And that's essentially what a central bank is.
Doing what they do best, huh?
The power to tax is the power to destroy, and there is no greater tax and more dangerous tax than fiat money, because you don't know that you're paying it. And I think the greatest fallacy that we all live with, we have no idea what things will cost in 2 years. We are culturally conditioned to blame the producer for higher prices, but all things have four parts to their cost: supply, demand, the cost of creating it, and the value of the money. And because none of us know what a dollar will buy 2 years from now, it's virtually impossible to have future planning beyond 6 weeks or so, because we are literally in a state of currency war, and it's a race to the bottom as to who can hyperinflate their currency first. And I would just tell you that if you look at the problems that are going on in Greece and the EU, the idea that they're in worse shape than us on a much smaller scale should not be a comfort to any American at all, because our scale of bad financial debt and derivatives is a nuclear weapon, like no one has ever seen before. It's not a matter of if it will go off. It's a question of when it's going to go off. I don't know about you, but I'm surprised at 4 p.m. Eastern every weekday that it hasn't happened.
You know what that reminds me of, Woody? When I would go to court on a case, and I would be there, and there would be thousands of files, and just thousands upon thousands of files, and the case would be scheduled in a different courtroom every time, and there would be hundreds of case files stacked up in that courtroom, hundreds of them, and somehow my file would make it to that courtroom at the appointed date and time, almost always. In fact, I can't remember one case where it didn't. And this was before technology, before files were scanned and you submitted PDFs of all your motion papers and everything. And it would be ballet. You would have these court officers, running around with files, bringing them to the judge, and the file would miraculously appear in that courtroom on the appointed date and time. And I would just scratch my head and just in amazement and wonder that somehow the wheels of justice would again squeak by and function, and justice would be handed out. And that's what our system today is like. Somehow nobody understands quite how it keeps working, but it's like the ever-ready bunny. It just keeps going and going until one day it's going to give out. We all know it. And then what happens? Well, that's anybody's guess. But
well, I like to use the analogy that our whole economic system is like a 1946 Farmall tractor. They're still around. They're still working. They're designed almost to break down. They're incredibly dangerous to use, even when they're in good condition. They can rip your arm off and kill you.
I so know what you mean, man.
100 different ways, and but the truth is that eventually that old baby is just going to get to the point where it's just not feasible to repair it anymore. Right. Versus buying a new tractor, because this one's been sitting out too long. Everything is rusted through. Can't get the parts. That's literally where we're at. We need a complete reset of the system to something new. And if you don't think these global banks are setting us up to do that with a system that will be invariably worse than the one it is that we have now, you have another thing coming. At the end of the day, beyond the kind of preparations for the stores not being open and not being able to get the supplies. And I continue to tell people water is the most important thing.
Yes.
If you have a source of water that you can get without electricity, you don't need to have much self-save, because people will trade you anything in order to have that water, because in 100 hours without fresh water, you're dead. It takes 200 hours to starve to death, and it could be 6 weeks before you see anybody that you'd need a gun for. But I would tell people, in the long term, when society recovers, whatever wealth it is that you have left will be based on the gold that's in and silver that's in your physical possession at the time of the crash. I don't know how valuable they're going to be to barter during a post-crash environment, But whatever it is that comes after for the rest of us, it's going to be based on that physical wealth it is that we took into it.
A swimming pool is a really good place to store water, although nobody looks at it that way, Woody, except me. I must be crazy.
Well, the problem is if you're a swimming pool, you always want to swim, and you don't want to drink. You don't want to be drinking water that you're swimming.
Well, hey, there's a filter and chlorine, iodine pills. You know what I'm saying?
Yeah. There is one other financial thing I would certainly like to confess to everyone and suggest they try it. Today being the 13th day of February, meaning today is 44 days in my life without any plastic, without any credit cards, without any debit cards, without even going to an ATM. And I have to tell you, I have inadvertently discovered at age 55, it is amazing how much money you spend less when you have to have the psychological pain of handing someone money.
Oh, yeah.
Versus that swipe. I've always heard that to be true, but I've been one of those who, was seduced by the convenience factor, and will tell you that in January I spent $1,000 less than I normally spend.
Oh, Woody,
by using only cash, and it's the last straw for me was a couple days before Christmas when I tried to take out $300 from an ATM, and it gave me $280, and it was the second time that an ATM had gypped me for $20, and I just said, the heck with this, I'm not doing it. The government will have to use my iPhone.
Yeah.
But I'm never going to use another ATM. You can buy gas and pay for cash. And I would tell you, it's quite a liberating experience to know that you have punched Uncle Scam in the eye and basically said, I'm not going to make it easy for you to track my movements anymore. Obviously, I still write checks and still do some online banking thing. But in terms of the physical transactions at the grocery store, the gas station, the post office, it's now all cash. And I have to tell you, it's a very empowering thing to do to get yourself out of the fiat slavery of plastic zip cards.
Hey, you got to understand, Woody, they're trying to get rid of currency. You didn't read my article. I know I sent it to you, called Operation Dirty Money. Okay.
I did read that, and they've been very successful at getting people trained in these zip cards. But I would just say, how many banks and healthcare companies of people having data breaches and losing debit card and other information is going to take for people to say, you need to get out of the system. And by the way, I should mention one area of the U.S. stock market I think everybody ought to get a piece of the action in is this cybersecurity. Every time one of these things happens, there's more money going to cybersecurity. The White House is about to have a big thing on cybersecurity. And there's a fantastic way to invest in cybersecurity without having to figure out which one of these companies of WizKids is going to be the stock winner. Yeah. There's a fantastic ETF. The symbol is HACK, HACK. It's $26, $27. I think this is going to be $75 2 years from now. This is one of the few areas of the U.S. economy where there's very, very dynamic growth. Companies are throwing millions and in some cases billions at cybersecurity, at these cybersecurity companies, trying to come up with new firewalls and new ways to protect it. This is one of the very few areas of the U.S. stock market that I think is somewhat crash-proof.
Hey, I want to make one other point about Operation Dirty Money and proof of what I'm saying. Still, your currency that you're getting looks like it's fit for the garbage. 20 years ago, all the currency you have in your pocket would have been shredded or burned. Okay. The Federal Reserve, the one thing they used to be pretty good at was getting those worthless fiat notes into your pocket. Now they've got machines that will take folded bills and spread them out. Forget it. So the other thing you've probably been seeing is they've been seizing people's bank accounts who use large amounts of cash. People who've been what they call spreading, I think is the term, where they'll deposit $3,000 or take out $3,000 cash at a time to avoid the mandatory CTRs or currency transaction reports when you take out $10,000 or more at a time in cash, even though they're doing nothing illegal. And there's been legion examples of them acting illegally, taking your money. So this is all part of a plan to make cash an undesirable medium of exchange. And they're succeeding at it because you saw, I quoted the bank rate survey that showed that less and less people are using cash. I personally like cash, use it whenever I can. And I've been, like you, phasing out the use of my cards wherever and whenever possible. But when you're in urban environments, you don't really like to carry around bags of cash. That's one of the things that they play on your fear to get you to use less and less cash, and it's working. And that's one of the reasons why the crime rate is really down, if it's down as far as robberies, because they get a bunch of credit cards which get shut off immediately. They're useless. ATM cards, debit cards, you need ID information, PIN codes, all that. So we're kind of fighting a losing battle. But one thing, if deflation really ever does kick in, cash will become the desired medium of exchange. People will be avoiding you. They aren't going to want to get paid. They'll be ducking you for payment, because the longer they wait to get paid, the more valuable the currency becomes. Yeah. Anyway, I don't want to get into all that, but
let me mention one other thing about paying with cash is all of these merchants are paying a couple of percent per year to these banksters to clear these swipe card, debit card, and credit card transactions. And when you walk in with cash, it's a very thing to say to the merchant, what's your merchant fee if I use a credit card? And they'll say 3%. Say, so if I give you this, Federal Reserve note, you'll give me a 3% discount, right? And it's amazing how often they'll say, yeah. So they say, well, I'll give you 2%. Or I'll give you 1%, because there's a lot of businesses that literally don't want you to pay cash because they don't trust their employees not to steal it.
Exactly. Well, there's a lot of reasons why cash was on the wane, but I will make this prediction on the show here with you that cash will make a resurgence at some point, if in fact, after the inflationary depression that inevitably will occur, we go into a deflationary depression. Anyway, got to go, Woody. Just give us your website again, how to connect with you.
WoodyKnowsMarkets.com is the website for my investment newsletter service. And of course, my life's work to abolish the Federal Reserve. That website is abolishfiatslavery.com. Kerry, always great to be with you. I wish I was in Florida. I bet you it's a little warmer there than West Virginia.
Yeah, well, you see me. I'm in a short sleeve shirt. I'm about to go for a bike ride. So anyway, Woody, keep the faith. Eventually, spring will come, and you'll get to get some relief from this perpetual global cooling that's going on now.
Great to be with you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.